Hello everyone, Corey Mitchell here with TradeThatSwing.com, and this is your swing trading stock market outlook for the week of January 6th. Ooh, that should be 2025. Happy New Year, everyone. And the stock market still a little suspect. We do have one thing that's improved in the list. The health indicators were all not so good, and one of them's turned around a little bit. We'll see. And this week, I looked through a lot of charts, just a little personal note. So I looked through a lot of charts, and I did see a lot of setups that I kind of like. A lot of things that look like they could be bottoming out and potentially get a pop. And then there's a lot of the health indicators and things which just aren't so good. There's some conflicts, and I kept kind of going back and forth on, do I want to put some capital in play? Yeah, maybe the health indicators aren't so good. But then I also ultimately came back to the thing we talk about each week. If there's a lot of conflicting factors, it's not really a super easy trading environment. There is some volatility out there, so we're definitely going to get some, short-term pops to the upside, downside, and I think I'm okay missing some of that. I am taking advantage of the volatility with the day trading, and that could extend. Like if you see some really nice setups, that could extend to, maybe holding for a day or two. But it's definitely a cautious environment out there for me, the way I see it. And yeah, there's some AI, quantum computing stocks that are really moving well, and how it can have huge couple-day moves. And if there's a nice setup there, yeah, I'll try to take advantage of it on a short term. But I kind of wrestled with it, but I'm still not willing to hold, the kind of typical swing trade where we might be in it for a couple weeks. It's just, the conditions, still not loving them. No interest in Bitcoin here. We'll talk about that. No interest in gold. The best swing trading stocks watch list was updated for January. I just updated it, as well as all these kind of bit longer term. If you're looking for longer term trades, stocks that are growing their earnings, kind of more a fundamental look at some stocks. These ones were all recently updated. So let's jump in and see what's going on here with the price action. Nasdaq's still in an uptrend here. Still making overall higher swing highs, higher swing lows. Yeah, we have a little bit of a, double correction here. Drop, lower swing high there, slightly lower swing low. But we've held above that last swing low. On the S&P, we got back to it, and we're holding there. So this is kind of flat the last while, and it's holding at that support level so far. So kind of on the cusp of an uptrend. The NYSE composite broke below multiple swing lows. It's in a downtrend. Russell 2000 broke below its major low. Downtrending behavior. So those are potential conflicts. The Canadian index, pretty big sell-off there. It is recovering. So if they were all moving well, that's better than if only some are moving well. This shows lots of stocks are not moving well. As I said, I was a little conflicted because I look through a lot of stocks and they look like they could be bottoming out. We had talked through the last several weeks that lots of stocks were selling off. We'll get to that, touch on that a little bit more in the health indicators, but it also shows up here with these indexes really selling off and these ones holding up. So we have, kind of the larger caps and even a small segment of these indices holding up, or a small segment, the stocks that are the biggest in these indices, holding them up a little bit, while a lot of other stocks just fell off. And yeah, just flipping through charts, a lot look like they could potentially bottom out. So some of those ones that have sold off more could maybe bounce, but again, it's just conflicting, and if I see a lot of conflicting information, then it's best for me to just stay out or be very cautious. Bitcoin tried to go above 100. We talked about this the last few weeks too. Still below 100,000. For me to get bullish again, we'd need to move above 100,000, ideally above this point, have a pullback that stays above 100,000, and then we start to move up again. We talked about 92, kind of this area that it's stuck in. If we drop below that, have a pullback that stays below that, and then we start dropping, that's short-term bearish. So right now it's just kind of in a conflict zone. It's working itself out. Don't know how long it's going to sit there. These ranges can last many months, as we saw back in 2024. We're just kind of whipped around for a long time, and that was a bigger range. That was tradable. You know, you had a $10,000 range there that you could trade in and out of. This is just kind of would be, unless you're very short term. These are much smaller moves, kind of whipsawing in here. And now that the holidays are all over, we'll see if it can make its move above. Gold, the gold miners, we can see in a downtrend, lower swing lows, lower swing highs. Gold, lower swing high, lower swing low, and we've kind of just chopped sideways slightly. This is, you know, still kind of pending and working itself out, but still downtrending behavior so far. So nothing bullish yet to want me to get involved in that. Let's look at the health indicators. Kind of what I mentioned here. Some stocks still looking okay, mainly in tech. But yeah, being very cautious. Short-term approach, I just prefer to day trade them if I see something I really like, as opposed to holding overnight, just with all these conflicting signals, and the health indicators are no different. Pretty much bearish across the board, except for we had this slight bullish divergence on the advanced decline line. So let's look at these in order. Volume, not really important to me at the moment. This is the daily percentage movement. The main thing here is that uptrends are characterized by low volatility, low daily movement. Downtrending periods, or periods where it's tough to go long, are characterized by bigger volatility. And it's really these like 2% drops that I care about. And we had a big, more than 2% drop back there in mid-December. We have not recovered from it. So we are in this kind of higher volatility environment, more indicative of downtrending behavior, not indicative of uptrending behavior. That doesn't mean prices can't go up, but it does mean that we are in a volatile, more likely downtrending type behavior. If it settles off and we start to get more like this, that's more the conducive to this type of just rhythmic, kind of easy trading uptrend, like what we had through here too, and even through here. Just, you know, no big sell-off days. It's just kind of complacent, people buying, prices go up. The advanced decline line here. So this was actually, it kind of has two divergences going on. So we had where it dropped below, if we look at the equivalent low, so there was a low here and we dropped below it. If we look at the S&P, it never got to that point. So that's a bearish divergence. This was basically leading, saying the S&P could sell off some more. Now we have this short-term one, which is saying we've recovered on this back to this high, which on the S&P would be equivalent to that. So this is a very short-term signal. This is kind of this other one's a bit longer-term signal. So it's kind of saying, hey, maybe we get a little pop, and then that's more what I'd like to see. How does it act if it does pop a little bit? Yeah, sure, I maybe miss a little bit of a move, but if we can pop and maybe have a higher swing low, and then we start moving higher again, price action wise, all these indicators will be in better shape, then that would give me a little more confirmation. Here it's kind of, we're maybe trying to pick the bottom a little bit, buying here. So it's like these other ones all still negative. This is showing a short-term glimmer of hope, but we still have this, you know, kind of bigger divergence playing out as well. So again, a conflict and conflict means cautious. Up volume divided by total volume, up volume divided by total volume. I'm just looking for extreme readings, either here, meaning huge upside volume percentage of total volume, or an extremely low upside volume percentage of total volume. And we've just been in the middle. We haven't had any important signals. This one still negative. This is the S&P 500. Only 23% of S&P 500 stocks are above their 50-day moving average. 38% of all U.S. stocks. That's low. Considering you look at this S&P chart, and it looks pretty good, yet only 23% of the stocks that compose this index are in an uptrend. As indicated by a 50-day moving average. Not that there's anything magical or super important about a 50-day, but it is, kind of a basic indicator of whether a stock's moving up. Is it above its 50-day average price? So some stocks still looking okay. I prefer to take a more short-term approach if I'm going to get involved in some of these bigger moving names that are still out there. And like I said, there's still some good-looking setups out there. I'll take a short-term approach to them. Be cautious. I prefer not holding overnight right now. There's some uncertainty out there, some conflicts on my charts, my indicators. So that tells me to, hey, be cautious. Sectors on the move. Energy did make a bit of a move this week. Over the last month, over the last 3 months, and just based on the NASDAQ, we can see it's holding up the best, a little more tech heavy. So I would say main sectors to watch. Still the communication services, consumer cyclical, technology. They're the best performers of the last 3 months, the last month. And there is a little bit that I discuss here. Like if a certain industry is performing well, you can trade that. Like the market might not be doing so good overall, but if a certain sector is or a certain industry, more likely a specific industry, is doing really well, there is the option to trade that. And that's kind of what I was talking about. I was wrestling with, do I want to trade it and hold it overnight, or do I just kind of want to take a more short-term approach? And I think for myself, I've just opted like, hey, if something's really moving, maybe I'll pop into it for the afternoon or for a day, but I don't really want to be holding much overnight, just because, a lot of conflict. So enjoying the volatility with day trading. No new swing trades in stocks or Bitcoin or gold. Still seeing big moves in quantum AI and quantum stocks, AI stocks, some other tech stocks. So there is that movement there. Take advantage how you like. That's what I do like about day trading, is that there's always something to do, whereas the swing trading, my swing trading is going to be quiet until conditions improve. So that's your outlook for this week. I hope you have a great start to the new year, and happy trading out there.